Hey, what is going on, guys? My name is Nick, and in today's video, I'm going to be sharing the 5 best cash flow dividend stocks that are worthy of buying and holding forever. Now, whenever I'm picking my dividend stocks to buy, I don't just consider the amount of cash that I'm going to be getting from those dividends. I also consider the historical stock price performance, the dividend payout ratio, the dividend payment history, as well as the future dividend growth. All of these factors are super important to consider before buying a dividend stock. And lucky for you, all of these stock picks I have today are quality companies with solid metrics in all of these different categories. Essentially meaning that these are investments that you're going to want to hold for the long term, if not forever. And I've even added one bonus dividend stock at the end with a very juicy dividend yield, so you're definitely not going to want to miss that, so make sure to watch until the very end. And so all I ask is that if you do enjoy this video, make sure to drop a like because it does help support my channel and for all of the research that I've done into this video. And if you haven't already, definitely consider subscribing down below for more weekly investing content just like this. But with that said, let's jump right into these 5 dividend stocks to hold forever. All right, guys, now the first cash flow investment that I have here on the list today is a company called Digital Realty Trust with ticker symbol DLR. Digital Realty is a real estate investment trust, or a REIT, that focuses on providing real estate for data centers across the entire world. The industries that this company supports spans from cloud and information technology services, communications and social networking, to financial services, manufacturing, energy, healthcare, and consumer products, so it's a vast array of industries that they support. And just to show you how big this company really is, they have properties all over North and South America, Europe, China, Asia Pacific, Australia, and more. Now, this is definitely the type of company that I would personally consider investing in because it's in such a growing industry, and being in the real estate industry focusing on technology is such a great avenue for growth. So many companies are now needing space for their data centers and their communications technology, and Digital Realty is just taking advantage of this and will continue to grow over time. Anyways, getting into Digital Realty's stock price performance, over the past year alone, the stock is up 8%. Over the past 5 years, they're up 60%, and then over the entire history of this company since 2004, they're up just over 1,200%. So honestly, guys, in my opinion, this is a very good track record performance for a REIT that generally pays a lot out in dividends, but is still managing to grow its business like crazy. Getting into their dividend history, we can see that Digital Realty has consecutively increased their dividends for 16 years straight and has continuously paid them since 2004 when the company was first established. And if you were to buy into the stock today, that would give you a starting yield of about 3%, whereas the trailing dividend yield is about 2.9% because they increased their dividend in 2021. Now, when it comes to a REIT's payout ratio, we actually can't use the net income for this. We would use a figure called the funds from operations, or FFO. This is because REITs have a ton of depreciation, and this actually skews their net income down to the downside, when in reality, they're actually making a lot more money. So over the last 12 months, based on their funds from operations, they have a payout ratio of 72%, which is actually very reasonable for a REIT. And then taking a look at the dividend growth over time, we can see that over the past 16 years, the dividend compounded annual growth rate has been about 10% per year. Overall, guys, Digital Realty has been able to grow its dividend in the double digits on average over the past 16 years, while being able to maintain a relatively low payout ratio for a REIT. So this is honestly excellent. However, it is important to note that because this is a REIT, the dividends are actually known as distributions, meaning that they're taxed at the rate of ordinary income. So it's very important to hold this type of investment in a Roth IRA to avoid that high dividend taxation. But anyways, moving on to the second cash flow dividend stock that we have here on the list today, this would be a company called Fortis, and they have the ticker symbol FTS if you're in the US, or in Canada, it's FTS.TO. Now, Fortis is a 99% regulated North American utility company that provides the transmission of electricity and natural gas to their customers all over. But you might be wondering, what exactly is a regulated utility company? Well, basically, a regulated utility just means that the company owns and operates all of its electricity and their assets. And they essentially have a monopoly, but prices are regulated by the governing utility commissions. But this does make for a very stable and consistent business model that is ensured to grow over time. Anyways, to give you an idea of Fortis' scale, they have $56 billion worth of assets and over 3.4 million customers, so I'd say that the company has a very large moat and is quite well insulated from its competitors. Moving on to their performance, over the past year, the stock price is up about 10%, and over the past 5 years, the stock price is up 36%. Then if we consider their all-time performance ever since 1995, the year just before I was born, the stock is up 800%. However, when we take a look at their investor presentation, the management actually calculated the total returns over the past 20 years, including dividends, to be a compounded annual growth rate of 14%. So this is very, very great for a utility company. Jumping into their dividend history, we can see that they have 47 years of consecutive dividend payments and increases every single year. So honestly, guys, it's going to be very hard to find another company that has such an amazing and clean track record of dividend payments and increases over time. Not only that, but if you were to be buying into the stock today for the first time, you would be getting a 3.5% dividend yield. Meanwhile, their trailing dividend yield is 3.4%, which essentially just means that they've increased their dividend this year in 2021. As for their payout ratio, Fortis is paying out about 75% of their net income in the form of dividends. And then because this is such a predictable business model and they have the regulated utilities, Fortis is actually projecting their dividend to increase over the next 5 years at a compounded annual growth rate of 6%, which is definitely modest. Overall, Fortis is probably one of the best run utility companies in all of North America, and they have a 47-year dividend increase history, which is absolutely insane, and I can't see them stopping anytime soon. All right, but now it's time for dividend stock number 3, and that would be known as Pfizer, with ticker symbol PFE. Now, Pfizer is one of the world's largest pharmaceutical companies, whereby prescription drugs and vaccines account for the majority of their revenue. And I'm sure we're all very aware of this healthcare giant responsible for creating the most effective COVID vaccine with BioNTech. In fact, the COVID vaccine has been a huge boost to Pfizer's revenue stream, having brought in $3.5 billion in revenue within only the first 3 months of 2021. And now with the potential for booster shots and the US government placing an order for over 200 million more shots, this could bring Pfizer another $2 billion in revenue in the near future. So Pfizer is definitely a hot stock right now at a very good valuation in my opinion, and it will certainly be around for the long term. Now getting into the stock's performance, over the past year, the stock is up 26%, which is really solid. And then over the past 5 years, they're up only 35%, but then their all-time stock performance is up over 5,300% since 1981. Now, Pfizer's dividend history really isn't as stellar as the other companies that I've mentioned so far. They only have about 12 years of consistent increases each year, and that's because they cut their dividend in 2008 during the recession. But as we can see with their current payout ratio being only 71%, they are managing their dividend quite a lot better than they were before, and this shouldn't be at risk of a cut. As for their dividend yield, the trailing dividend yield for Pfizer is 3.4%, whereas if you were to buy into the stock today, you would be getting a 3.5% forward dividend yield. And ever since they restarted paying and increasing those dividends since 2008, they have been growing at a compounded annual growth rate of about 7.5% over those 12 years. Overall, I think that Pfizer is in a great position right now with the COVID vaccine rollout, and also the brand recognition across the world is tremendous right now too, because literally everyone knows about Pfizer now. And I believe this business will be around for the long term as the healthcare industry continuously needs new cures and new medicines for many different types of illnesses, and Pfizer is definitely the leader in that area. But anyways, with stock number 4 here today, we have to move to a completely different industry, and that would be the banking industry, and here we have TD Bank, with ticker symbol TD, or if you're in Canada, TD.TO. So TD is Canada's second largest bank with a current market cap of about 150 billion Canadian dollars. And TD operates all across North America in 3 key business lines, which are the Canadian retail banking, the US retail banking, and wholesale banking. In fact, TD is the one Canadian bank with the largest and growing presence in the US, which is one of the reasons why it's seen so much growth over the past decade and longer. For instance, over the past year alone, the stock price is up 33%, and then over the past 5 years, the stock price is up 42%, and of course, over the all-time stock performance, which we always have to talk about, is up 3,200% since 1989. However, when including dividends, the management actually calculated the 5 and the 10-year compounded annual growth rate to be 12.2%, and that is a really good return for a bank. Now, jumping into their dividend history, we can see that TD has paid their dividend for 164 years continuously. Like, just wrap your mind around that for a second. It's ridiculous. And then 11 years consecutively, they've increased their dividends. because they didn't have an increase in 2020, and then they also paused increases in 2008. Basically, because of COVID, the regulators required banks to stop increasing their dividends, but honestly, TD could have increased them further because they had enough cash on hand. Anyways, moving to the dividend yield, we have the trailing and the forward dividend yield to be about 3.8% right now, which is really solid. And this all comes at a payout ratio of only 37%, which means that TD is going to easily be able to boost up its dividend over the next few years, and in quite a large way, I would think. And their history of dividend growth really just proves my point on that, because over the past 26 years, they've been able to grow their dividends at a compounded annual growth rate of 11%. Overall, I absolutely love TD Bank, and I think it's one of the best run Canadian banks out there in my own personal opinion. You definitely can't go wrong investing in TD, and they'll definitely be around for the long term. All right, now getting into dividend stock number 5, which is the second last because I do have a bonus stock coming up. Don't exit the video yet. But anyways, this fifth stock is one known as Realty Income with ticker symbol O. So Realty Income is a commercial property REIT with locations across all 50 states in the US, as well as in many other locations globally. The company leases properties to major companies like Sam's Club, Walmart, 7-Eleven, Walgreens, Coca-Cola, and many more. And because of their very long triple net leases lasting over 10 to 15 years typically, this means that they're able to generate consistent rental income, and this means that they can actually pay out monthly dividends to their shareholders. But it's also very important to see how well a REIT is managing its per share metrics because of the typical share dilution that you do see among REITs. And as we can see here, the company has consistently grown its AFFO, which is the adjusted funds from operations per share, every single year. Now, getting into their stock price performance, we can see that over the past year, the stock price is up 13%, but then over the past 5 years, it really hasn't moved at all. It's neither up nor down, despite their AFFO growing over this period. And then getting into their all-time stock performance, it is up 684% since 1994. However, if we do include those dividends that are paid out, the management calculated the compounded annual growth rate to be 15.3% per year since 1994, or over 27 years, and this is nothing less than excellent. As for the dividend history, they have 614 consecutive monthly dividend payments, which equates to about 52 years. And then in there, they have 111 dividend increases since its 1994 New York Stock Exchange listing. And if you are to buy into Realty Income today, you're actually going to be getting a dividend yield of 4.2%, which is really solid. Now, again, when it comes to the payout ratio for a REIT, we can't consider the net income. We actually have to consider the AFFO, or the adjusted funds from operations. And I calculated this to be about 80%, which is still okay for a REIT because this is such consistent rental income. So it's not going to fluctuate too much on a monthly or yearly basis. And then over the past 27 years, the dividend has grown at an average compounded annual growth rate of 4.4%, or since 1994. Overall, I think that Realty Income is a solid investment, and being right now where they're basically not up nor down over the past 5 years, yet they've still been able to grow their funds from operations, I think it could be a good buy-in point. But regardless, just for the dividend's sake, I would definitely consider this as a great investment opportunity for the long term. But again, guys, because this is a REIT, it's definitely important to consider the dividend taxation, so make sure to hold this in a Roth IRA if you don't want to get taxed at that ordinary income rate. All right, and finally, I've added a bonus stock at the end here. It didn't really meet the cut for the top 5, but I did want to show it regardless, and this would be Verizon with ticker symbol VZ. Now, I didn't include this stock in the main list because of its very slow stock price growth over time, but regardless, this is an excellent cash flow dividend stock that I thought I should at least mention if you're wanting some dividend passive income. So Verizon is one of the top US telecommunications companies, which provides technology, communications, information, and entertainment products and services to Americans. And despite this company lacking growth over the years, Verizon is a good 5G play for the future, as they're currently investing heavily in this area and offering 5G services already. All right, so over the past year, the stock price is down 9%, and then over the past 5 years, it's only up 3%, so it basically hasn't moved. And taking a look at their all-time stock performance, since 1983, the stock is only up about 600%, which really isn't a whole lot, and it definitely isn't a stock you would want to buy for growth. And even just taking a look at over the past 20 years, the stock really hasn't moved, and it hasn't been able to break out from its previous all-time high from late 1999, but the dividend is definitely another story, and that's why I included it at the end here. So Verizon has consistently been paying out their dividend ever since they went public in 2000, and then they've been increasing it consistently ever since 2006, which is 15 years. And if you were to buy into the stock today, you would get a starting yield of 4.7%, which is probably the best in the list that I've mentioned here today, so that's going to bring you a lot of cash flow. And this only comes at a payout ratio of 52%, which is definitely manageable and probably won't deserve a cut at any point in the future. Now, it should be mentioned that this dividend has grown at a much slower rate than many of the other stocks that I've mentioned, and so over the past 15 years, it's only grown at a compounded annual growth rate of 3.7%. So although this company hasn't seen a whole lot of growth in recent years, and they've grown their dividend quite a lot slower, they do have a very good starting yield at 4.7%, and this would bring a ton of cash flow to your portfolio. Not only this, but they do have a good payout ratio, and then they could be seeing a lot more growth due to 5G in the near future, so we'll have to see how that plays out. Anyways, those are the 5 best cash flow dividend stocks plus one bonus stock at the end. I really hope you guys enjoyed that, and let me know down below if you do own any of these stocks or if you plan on buying any in the near future. So guys, if you did enjoy the video, I really would appreciate a like on this video. It did take a ton of research for me, and I would just really appreciate that. Also, if you're really into investing and you like my type of content, make sure to subscribe so you don't miss any future uploads, which will be coming very soon. Anyways, with that said, I'll talk to you guys in the next one.